Moving on, U.S. consumer price inflation was surprisingly soft in November with an annual headline rate of just 2.7%. There is some skepticism due to the scale of the downside miss relative to analyst expectations and the impact of the record longest government shutdown. But the inflation report was remarkably soft given the backdrop of tariffs and concerns over insurance costs. The softer reading leaves the door wide open for earlier and swifter 2026 rate cuts. That also explains why Fed Chair Jerome Powell sounded so relaxed last week. However, the Fed boss suggested that the tariff impact will peak in the March quarter of next year. Still, the market view is for a rate cut in March and another in June. The risks seem skewed towards the Fed being able to deliver more unless the jobs market start to stabilize. The latest jobs data and the surge in bond yields suggest that otherwise it could be completely opposite. While anecdotal reports showed Americans are feeling the pinch of rising prices of daily goods to almost everything else, hard inflation data is yet to catch up. Across the Atlantic, the European Central Bank kept rates on hold. The central bank's new forecasts show the good place is the right place. In fact, ECB President Christine Lagarde reiterated that the ECB was in no rush to change rates anytime soon. But remember, the bank had revised its 2026 inflation forecast higher. On the other hand, the Bank of England cuts rates in a heavily divided decision. But this decision was more hawkish than expected, leaving market rates higher and sterling slightly stronger. Bets show that it's a close call whether the bank cuts again in February or March. Investors say the UK will soon look less of an inflation outlier, giving it room to cut in the second half of 2026. But the real question for the developed economies next year is how far and long will the current rate cut cycle run? What happens to inflation next year when tariffs start to reflect in official figures? More importantly, can central banks, especially the Fed, look past inflation to fight an economic slowdown and the real impact of President Trump's trade brinksmanship?